Welcome, ladies and gentlemen, to everybody that is here at Old Mutual Pinelands and everybody else, of course, who's joining us on the various streams and the live programming. Welcome to a very important panel discussion that we're going to be having with a panel of highly esteemed and well-experienced, well-traveled, and as you've heard, very qualified people to have this debate. And we, of course, we are having this debate on the sidelines of the World Economic Forum on Africa. And the theme of this week, or this year at least, for West Africa being about inclusive growth and also about how we achieve that for a shared outcome in, of course, the context of a fourth industrial revolution. We, of course, are going to focus on the financial services industry particularly. So we're going to talk about the fourth industrial revolution. We're going to talk about inclusivity, but specifically on the role that this thing that we call financial services actually plays in making sure that more and more people are part of the action. So that we don't end up with a rich Africa but poor Africans, which is essentially what we're all having to deal with today. You've heard who the panel is, so I won't introduce them again. We'll get straight into the conversation. How we're going to run this is that we will, of course, hear from our panelists and the views that they've prepared for us. And then, of course, I'll open the floor to you, where you'll be free to add in your own thoughts to the conversation or any questions you might have for any of the panelists a little bit later on. Karabo, let me start with you. And I want us all to look into our crystal balls for a little bit here and kind of take context of where we are, the countries that we operate in, the industry that we operate in, and maybe the part of financial services we operate in. And give me a view from a personal finance perspective. What do you think are the big trends and developments that are likely to come in technology, but technology that's trying to provide one, good service and value for customers, but also trying to take along as many Africans as possible on the journey?
So I think in the personal finance space, we're focusing on what we can use in terms of technology to improve business efficiency for the services to our customers. And also leveraging it to really make sure we're understanding our customers in a greater sense, and what we can do to actually leverage it to build new solutions. So that actually, I think, is actually kind of the construct in which we're thinking about it. What we can do in terms of maximizing business efficiency in service for our customers, but in particular, what we can do in terms of thinking about technology to deploy different solutions to our customers and solutions which we might not have even thought about even now.
Talking about solutions, you know, the whole world of financial, personal finance, let's say, particularly when it comes to insurance, you know, in the past has been somewhat of a grudge purchase. The relationship with insurance has been buy this product or buy that product. It's never really been holistic. Suddenly, when I look back growing up as a kid, the way my parents would refer to insurance is the thing you had to buy in case something bad happened. Nowadays, of course, it's a much fuller service. Maybe take us through what you guys do in personal finance and how you're ensuring indeed that you provide this better service for clients.
Yes, so we're focusing on holistic financial advice. That's really important to make sure people are getting that expertise. I think it's taken for granted often that actually people know what insurance products are about. It's quite contractually heavy, a lot of terms and conditions. And I think
a lot of forms.
Well, we're taking out the forms, so that's something which I think is improving. But a big focus on really understanding what our customers are looking for in terms of their life dreams and goals, and how finances can actually enable that through the products that we have. But at the same time, lots of people are engaging with products digitally now and in a direct fashion. That's probably one of the areas which I think is growing in a very fast way. But at the same time, I think it's important to make sure, yes, we can provide maybe simple solutions digitally. We can find ways in which we can direct customers through the decisions that they need to make when purchasing a product by themselves. But at the same time, making it very clear that it's also important to make sure one is leveraging advice. And there's a very big component that financial education can play in that. And that's something which I think we have done very well from an Old Mutual perspective. There's been about 30,000 people who've engaged with Moneyversity, which is our online financial education module. And what's great is that we now reward people to do this because we feel it's so important in terms of really understanding one's finances.
All right, great. We'll come back to some of the conversations around education and technology and the adoptability of such technologies in your market. And Gazi, let me come to you. You're an entrepreneur, which means that you're always positive. You and I cannot afford to be negative. Talk me a little bit through the story of Yalu, just by form of an introduction to everybody about the business that you guys are in. I love how you reference the fact that it's the biggest but least understood form of insurance. But also, you have a look at your crystal ball. when you look at what you guys do every day and the markets that you service, what are the trends? What are the technologies? How do you service clients better going forward?
Thank you for the opportunity. So Yalu really was something my business partner and I sort of stumbled into initially. It was a product set we used to look after in our previous jobs, and we never really gave much thought to it because it seemed to do well for us. As an organization, we were, as one would say, printing money, and we didn't think too much about it until a really unfortunate event occurred in her life that really shook us into, it woke us up from our slump, and we realized that there's something fundamentally wrong with this product called credit life insurance. And so just for the uninitiated, credit life insurance, if you tomorrow go to, say, a particular colored bank, whether it's a red bank, whether it's a green bank or a blue bank, and you ask for a form of loan, they will typically ask you to have credit life insurance, which is a type of insurance that specifically covers your debt for the duration of that loan. And, you find that there's about, depending on who you talk to or source, there's about 12 to 15 million of these policies in the market, and most people don't even realize they have it. And they're paying, in a lot of cases, exorbitant fees and haven't been able to claim. And so that's where basically Yalu came in and said, how do we introduce education to the space? How do we introduce competition to the space? And ultimately, how do we ensure that customers get a much better deal? So that's basically the beginnings of Yalu. In terms of your question around crystal balls, I certainly don't view myself as a technology maven or somebody who can see into the future about what it might look like. But I think for me, what was interesting was an interaction I had earlier today. So the person who founded the World Economic Forum, Professor Schwab, he said that his biggest fear right now in the world is change leads to people being more insular in their approach to everything. So he was talking about the political change that's happening in the world. So the fact that more countries are becoming more nationalist in outlook, that they want to do things on their own and they want to go at it alone. And his comment was he thinks that the source of that is the fear of change and the pace at which change is happening. I think something similar is probably going to start playing out, if it hasn't already, in financial services.
Okay.
The change is going to be rapid, and it might lead to a similar type of reaction, which is fear. And when you fear, you start saying, I can go at it alone. You start lashing out at potentially those who are bringing in this change. And so I do think there is going to be friction initially, but I think we can get over that friction by finding ways of realizing that we are actually all working towards the same common goal, which is to ultimately give consumers the ability to achieve financial freedom. And we're only going to achieve that if we actually collaborate and work together, which is where the world was at the end of World War II. It was a place where people wanted to collaborate and work together, and now we're in a place where, because of this change, this collaboration and working together isn't an immediate instinct. And I think that will determine where the technology can go, what solutions will come out, if that collaboration takes over and not the fear that I think that is potentially still there.
Got you. Right. So some friction on the horizon, and what extent will that impact on how we get over some of these difficulties? You're right, 100% correct around people wanting to do their own things. All you got to do is look at the East and the West, what's happening between Trump and then the other side of the continent. A lot of friction happening there. What's happening in Europe, and even to some extent what's happening in our own country right now. We're unfortunately seeing a lot of friction between even Africans amongst themselves. So that's something that certainly we can come back to and have a look at deeper. Nuru, let me come to you. You come from the part of the continent, East Africa, that's certainly up there when we talk about innovation. You taught us that people could actually bank on their cell phones and actually pay bills and actually live their whole life with their bank account being a few digits on their cell phones. A few other people tried it. It did not work as well as it did in your neck of the woods. What have you seen that has been successful in East Africa? Certainly sitting at the Banking Association, where I guess you're sitting with other banks, you're trying to deal with how to manage this disruption. All these small guys like this man's business are coming, trying to find their way in. But you're also trying to work with regulators to try and regulate all this stuff. What do you see coming up?
So I believe if you want to see where you're going, you need to appreciate where you've come from. And when you look at how far the financial services sector has come from, we've come from a point in time where having a bank account was a preserve of the wealthy, and particularly wealthy white males. And now, as you rightly point, we have arrived at a point in time where anybody can have a bank account as long as they have a phone. And it doesn't even have to be a smartphone. It can be a simple feature phone. So I think technology has played a huge role in ensuring that democratization of the financial services industry happens. But I think at the same time, and we were talking about it earlier, the changes in the social setting and the social structures has also contributed to that. And also our cultural trends and how we've evolved as democracies and how markets have liberalized has all fed into a groundswell where technology has enabled things to open up. So in terms of where things are going in the future, I think I see things differently. I don't think it's going to be like this radical change.
Okay.
Because even when you look at blockchain, what is blockchain? It's basically an automated ledger. Banks have been doing ledgers for the past 200 years. So it's taken us 200 years to automate the ledger. So I don't think we will see this, do you call it breakneck speed changes? I think a lot of the technologies that we are enjoying today have evolved over time. And therefore they will continue to evolve and continue to be responsive to how society is changing and evolving. So in Kenya, certainly mobile banking has underpinned a lot of innovation that we've seen in the sector. And it's not only from a payment space, we've seen innovation in insurance, from a health perspective, where now consumers can access a health wallet where they can pay as you go and save for health insurance, and you can actually gift insurance to somebody else who doesn't have insurance.
Wow.
Kenya was the first country in the world to have a mobile sovereign bond where the government made access to sovereign debt available from your USSD code. So decentralizing and demystifying the whole capital market space. I think if you're like me, you don't even understand how mobile bonds work, right? Even though I'm in the financial sector. So you can imagine your grandmother up country being able to use maybe $1 or $2 to buy a government bond on her mobile phone. So we're seeing lots of technology-driven changes, and I think they will continue to happen as society accepts technology and it becomes commonplace. I think what we're also seeing at the Bankers Association level is a change in perspective. I think the future is all about partnerships, collaboration, and ecosystems. So you're beginning to see competitors come together to create products, to leverage on each other's comparative advantages. Just recently in Kenya, 5 banks came together, vicious competitors, came together to offer a mobile-based loan that is single-digit interest rate for targeting specifically the informal sector and SMEs. A year ago, that would not have been thought about. But I think definitely in the future, we're going to see more of this collaborative competition, fintechs partnering with banks, because obviously the fintechs have the comparative advantage from an algorithm perspective.
Right.
We are good at KYC, we mobilize deposits,
Right.
we have the capital base. So I think the future is very much going to be like what it is now, but it will just evolve.
No sudden Big Bang theory.
I don't
You're
think
talking
so.
about an evolution.
I think even the flying car, we've been talking about flying cars since Star
Yeah.
Trek, and they're
Yeah.
not flying
And
yet.
we still don't
So
have
I
the
think
flying
it's a process.
All right, no,
Yeah.
loud and clear. Let's go to West Africa. Samuel, you head up the Old Mutual business in West Africa. I guess I would ask you the same question. A lot of people often talk about Africa being 54 different countries and not this one big continent. But also West Africa is also not this one big blob on the map. It's a few countries And even in those countries, consumers are also not homogenous. What's your view on where the customer is and let's call it Old Mutual's ability to satisfy that, but also where we might need to go as a financial services industry to achieve this inclusivity we keep talking about?
Well, I think the first thing to say that the needs, whilst the means to satisfy needs may be different, the needs essentially are the same. And the desire for access, the desire for participation, the desire for quality service remains the same. The stage of development is different. So we're in markets in West Africa where, for example, there's very low insurance penetration. In Nigeria, it's less than 1%. In Ghana, it's approaching 2%. And when you consider the size of the population of Nigeria, that is something that, on the one hand, gives you great optimism for the future because, to some extent, the only way is up. But at the same time, you have to ask yourself, why is it? Why is it that 20 years after the advent of democracy, we have insurance companies that are over 50 years old, so the idea of insurance has been around for a long time. Why has it not penetrated the mind space and the wallet share? Why is it that, in a sense, we have a very new industry, pensions industry, that has gone from zero to nearly $30 billion in less than 10 years? So that shows that there is a wallet there is a need for service, and if you can get the regulation right, and if you can get the service provision right, and if you can get the most important thing right, which is trust, and appreciation of value proposition, then we can get to do the right things. So where the customer at the moment is, and where, in a sense, technology is taking them, is that they're more aware of what's available. So we've seen some regulatory changes over the last 10 years that has made insurance compulsory, and that has driven some of the growth in the market. But whilst compulsion is not always a great thing, it's made people realize that there is value.
Yeah.
So you've seen some companies, particularly local companies, grow from very small beginnings to be quite substantial. But you've also seen that the way this has happened, we still have not closed the trust deficit, which is why you see a long tail of small, subscale operations. What that creates, and I think one of the things coming to your point about what do I see in the future, you see the technology offers a means to, in a sense, close that trust gap or alternatively make it even greater. What do I mean by that? Well, technology creates the opportunity for transparency. And with that transparency, it means that we can actually reach more customers, know them more intimately. It enables us to provide them with a better service, a more efficient service, and provide them with better experience. But the converse of that is that that transparency enables them to compare us more clearly, judge us more readily, and dispense with us more quickly. And that, in its sense, brings a very exciting dynamic to the market. However, the fundamental issues of access and of affordability and of sustainability remains. So in some senses, I agree with Nuru, not a lot will change. You still have to answer that question. You still have to deliver a product that speaks to the need of your customer, having understood it, and deliver it at a price point they're willing to pay, but still satisfy your capital providers and satisfy your stakeholders, everybody in the value chain, and have something on top to invest in the community.
See.
When you're dealing with very small case lots, case sizes, it makes it very difficult. When you're dealing with people who have an inherent distrust of your product, you said earlier on that insurance is what you buy when things go bad. What you didn't say is that insurance companies are people who don't turn up when things go bad. I used to say in a previous life that insurance is actually the industry that invented small print. And so we've got a lot of work to do to correct that.
Right.
And technology won't change that need to build trust. It will give an opportunity to those who are in a sense, trustworthy and who are, and we, as a highly governance organization, like to think of ourselves as trustworthy, and I guess we've been proving it for 170 odd years.
Yes.
It gives them the opportunity to tell their story to more people and tell it more clearly. It also gives the opportunity to listen more intently. And I think that's one of the things that's going to have to change. We need to change how we think about the value of customers. In the same way we had to come up with new ways of valuing companies when .com came.
Yeah.
And yes, we did get it spectacularly wrong a few
No, we
times,
clearly didn't do it, yeah.
We also have to reassess what we mean by the value of a customer. And I think that's a shift. We have to reassess how we develop products. We as an industry, typically, though we don't like to admit it, we like to sell what we make. It's very hard for us to make what sells, especially if you're populated with very clever actuaries who know that they know what's good for you.
Yes.
Unlike we accountants who know different.
Of course, of course. Accountants by far. We like to sell what we make. We don't often make what sells.
Yeah. So that's one of the things. And I think technology, that transparency means we're going to have to be more nimble at making what sells. And I think in a sense, that's where the fintechs have a lot to teach us. Because they start with not a lot of capital, they can't waste it, and so they've got to understand what is going to work. What does the customer actually need and is prepared to pay for much more quickly than we can.
Right.
And I think working together, what I see going forward is actually more collaboration.
I see. Very similar, I guess, to what Nuru was talking about. Let's talk to the Chief Digital and Data Officer of the Old Mutual Group, especially after some of your colleagues have made the comments that they've made. I'm very interested in your own thoughts, Vuyo. Take us on the journey of how Old Mutual is trying to meet that need. And what informs the initiatives that you are busy with? Because we talk about this inclusion thing, and I'm often critical of business people that, business people don't wake up in the morning and say, how do I make sure the world is more inclusive? Business people get up in the morning and they say, how do I deliver value, right? To my customers, to my potential customers that I can steal from everybody else, to my shareholders, to my people. But nobody wakes up to necessarily make the world a better place. What are you doing?
I think, Andile, there's a couple of assertions we have to make first. I think one of the assertions is that you can't actually have a conversation about inclusion without, especially financial inclusion, without 4IR technology. We've got to make that out and say, actually, that's a fact. I think the panelists are talking about what consumers are looking for. I also have an assertion that says, actually, what customers are looking for has not changed over time. What they're starting to see is different ways of how those needs will be met. And technology is a fundamental driver of how those needs are being met.
But the needs don't change.
The needs haven't fundamentally changed. I've got a need to wake up and eat and shower and all of those things. How technology is shaping how we think about delivering them is changing fundamentally. And it's driven by a couple of things. It's driven by how I'm experiencing what I'm getting from Netflix. It's a recommendation that looks like it's talking to me. So I'm expecting financial services providers to be able to give exactly the same. People now are not going on websites and look for stuff. They're using Alex to have a conversation. I expect to engage with my financial services provider exactly the same. So these are the opportunities that really have to fundamentally shift how we kind of think about the things that we need to do.
Right.
So with all the excitement, there's a couple of things that we have to think about, especially as a Pan-African player as well. So we've got to think about all this excitement with a couple of issues. So think about the case of Snowden. We all remember it. Think about the Panama leaks. We all remember that. Think about recently Cambridge Analytica. Remember it? The most publicized one was what happened in the US with Trump and what happened with Brexit. But actually, Cambridge Analytica was operating on the African continent way before that. So then the issues around, actually, all of this stuff is really exciting, but we really have to start thinking about, so regulators are coming and say, actually, where does this data move? Because technology is now saying, actually, you can spin up a cloud and you can have all the data that you need available in the cloud. But how dealing the issues around sovereignty, point you spoke about, how dealing with issues around localization. Whose is it? Does it move freely? And all of those things. So these are the things that, as we think about the work that we're doing as a Pan-African player, we've got to think about them. So otherwise, there's no point being a group when actually each and everyone is operating on their own. As the colleagues are saying, some businesses are big and small in other territories and all of those things. So how do we leverage the scale of this enterprise? So the things that we're working on are saying, actually, everything that we do, our premise is that it's driven by what customers are looking for.
And who's the customer, Vuyo? Is it the person who's already holding the policy? Is it the one that's holding the policy in the other company that we won't mention outside there? Is it the person who's doesn't have the insurance, to Samuel's point about the lack of penetration of insurance services in Nigeria? If we are talking about inclusivity, are we having an honest conversation? Can we, all of us here, really bank the unbanked, insure the uninsured? And can technology really help in that? Or actually, we just having a nice side chat because it's the World Economic Forum and we all say nice things to each other?
My fundamental belief is that if you the colleagues have spoken about what happened in East Africa with M-Pesa and all the great work that's happening in East Africa. But outside of banking, just think about the service called Please Call Me. Our grandmothers are using it, left, right, and center, because it's easy to use, it's simple, but actually it's satisfying a need.
Yep.
There's a need that's there. I don't have money. I need someone to talk to, and I need a way of being able to do that. Simple. So how we start thinking about how those needs are met is absolutely, absolutely fundamental. And I think, to my colleague's point, we don't operate like that today. This is what I have. How do I sell it as quickly as I can? So the technology then is asking us to fundamentally, because these things are really fundamental to our business models.
I got you, Vuyo. Nuru, you wanted to weigh in?
So I think it's a good question. Who are the customers? Because it's a conversation we're also having in Kenya and something I've been appreciating over the years. Probably a decade ago, banks were not rushing to finance micro and small businesses, not in Kenya, because of the risk profile of these individuals. And because the banks did not have the data, the information and the analytics so as to price the risk appropriately, so as to extend the products to this segment. But today, and I've been doing research about this over the past 8 years, today the majority of banks in the Kenyan market have a product targeting the SME market. Some banks have as many as 23 products targeting the SME market. And why is that possible is because of access to information and data. So there's the SME sector in terms of who's the customer. Then there's also and I mentioned earlier before, the informal sector. There's a FinAccess study that was done by Financial Sector Deepening, and we found in Kenya, most formal financial service providers are targeting about 3 million employed workers, whereas there's a whole ecosystem of 12 million in the agri sector and the informal sector that are either unbanked or underbanked.
And they are still a compelling business opportunity.
Exactly. So, and then also within that, there's the gender aspect. So when you look at products that are targeting women, for example, you realize that a lot of women-owned SMEs, as much as SMEs are getting access to finance, they're getting less finance, smaller ticket sizes, shorter tenors. So in terms of investment capital, it's not as much, probably working capital and such. So the question is, who is the customer today and into the future? Then you start asking about the youth. When you look at the lifetime value of young people, it's cheaper to bank an 18-year-old than a 40-year-old. I'm in my 40s. I'm more expensive than my child is for any financial institution because over the period of her life, of course, she'll access more products, more services. She'll be more amenable to taking the insurance. She'll be more amenable to talking to a robot, a chatbot, and such. So I think as a financial services sector, we need to be asking ourselves that question you're asking. Who is the customer and who creates the longest value? And then also, how do we ensure we create sustainable economic growth?
Before I let you go and take other comments on this customer question, how did Kenya bridge the so-called education question? Which can sound a little bit annoying to hear, but the issue of our customers, potential customers, in this bottom of the pyramid market, which they brand in quite an annoying way as well. Do they know these products? Are they aware of these products? Do they have access to these products? Should we educate them? How do you bridge that? So you're talking about all these banks going to all this market they never did before. How do they do that without first, I guess, educating the market? Or do they have to?
So I think there's an issue of education and this also an issue of financial literacy. So you don't need to have a degree to know how to use basic financial products. And also just the way most of our society is structured, we're all familiar with, our aunties coming together to pool money together, merry-go-round and invest. And once you put it on an app, it's a natural progression. So I think a lot of the products that are in the market, you don't need to be educated to know how to use them. M-Pesa, actually, the history there is it started as a social project. It was not a commercially viable product in the beginning, but look at what it's done to the financial services sector. So it started as a service, a social system of sharing funds between individuals, and now you've commercialized it, you've brought in different types of products, you've brought in mobile wallet for savings, for borrowing, now you have the health wallet. So I think this issue of education, I'm not quite sure where it stands in that. Yeah.
Okay. Samuel, you wanted to add on?
Yes, I was picking up the point about the customer.
Yeah.
I think I agree with you that the needs, fundamental needs haven't changed, but how we have framed those needs and who we consider to be our customer has created a boundary, and we actually need to expand that boundary and understand that there are pools of customers that we've not yet reached, and perhaps our cost structures and our way of doing business hasn't allowed us to reach in the past. But if you look at the ICT journey that's been on this continent for the last 20 years or so, that has changed so much about our ideas about who is a viable customer and how we can reach them. So once upon a time, the idea of actually being able to make a telephone call when you wanted was something that's very strange. If I think of Nigeria at one stage, before the advent of mobile phones, you had 700,000 telephone lines in the country serving what was then about 120 million people. And of that, probably 400,000 were working regularly on the basis. So you had to book your calls. If you wanted to make an international call, you had to save up for about 3 months before you could talk for 10 minutes. Then suddenly, your shoe shine boy was making a phone call. So what the issue wasn't so much the phone or the technology, it was what technology enabled: connectivity, better productivity. You didn't have to get to your meeting across town through 3 hours of traffic to find out that the person or guy was not on seat. Mm-hmm. You could know that by making a phone call and spend your time doing something productive.
Wow.
So, so we see that happening, but it still only expanded the boundary a little bit. I think what the new technology is allowing us to do is to reach out more, to touch. And then we still need to then decide, okay, then how do we communicate our offer? How do we understand what our offer means? And I agree with you, it's not that you have to educate somebody. You don't have to educate somebody that, you save money, you share money, whatever. You have to say, what does my product do to meet that need you already have?
Okay. Gazi, what's been your experience?
So I think of one particular example that we've seen. So we've got a chatbot on our website. And initially, we did, may I please say the corporate thing, which is let's pull data on what conversations are happening, and let's categorize the data, and then let's see what kind of patterns are emerging based on what customers are asking us on this chatbot. And we ran the exercise for a few months. Nothing really clear was coming up, but we were trying to force some sort of a pattern to say, this is what customers are talking about, so this is what we should therefore do from a marketing perspective. This is what we should do from a sales core perspective, or whatever it may be. But what then started changing a little bit was realizing that the more we allowed people who just engaged with us on that platform to just have long conversations. I mean, now these things have gone from, this is what the product does, this is when it will pay out for, and this is why it's better, or why we think it's better than the competition. Now the conversations have evolved to, full-blown conversations about, you know, how do you think this product will help my mother who's currently who's currently over-indebted. And now, instead of chatting to get a sale, we're just actually having conversations with people. So, you know, there is some level of smartness that the chatbot has, but then there's a point where it reaches a endpoint and realizes, no, it's not that smart.
I need
then
a human
falls
being.
to
I need a human being.
And then the human being starts adding a bit of spelling errors, like, that's not now the bot talking, that's a human being talking. But what for me, what's really, really blown my mind in terms of trying to understand who is the customer, it's realizing that in just letting free-flowing conversations happen with people who just want to understand a little bit more and not trying to have a product conversation, not trying to, I'm hoping that this leads to an immediate sale. We're finding that, you know, our people are much more engaged with anyone they want to chat to. So we don't now measure and say, how many customers have you potentially converted through this platform? We're not obsessive about the patterns. We just want conversations to occur.
Gotcha.
Now those conversations are flowing, and every now and again we get shocked by what happens. So for instance, that same person asked about their mother, but a week later, mother came online, took out a product, and then said, oh, yeah, my daughter told me that you guys had a long chat about it on this platform, and it was very unexpected. And so for me, the definition is definitely wider than what we've always viewed it as, but also the way in which we engage, it's got to just be conversational and not be as obsessive about did this lead to this sale and so on and so forth, which is what is more traditional.
Karabo, have you seen the same?
Yes, definitely, and it's actually leveraging something else, which is a kind of a reality of the fourth industrial revolution, which is around crowdsourcing. I mean, this is exactly what it's talking about, and to some extent, that really talks to this inclusive growth narrative. The fact that you can use the insights from your customers, or it could be from whoever. I mean, yes, we think we have the smartest people in our organization, but we know there's other smarter people out there too. And it really is about how we can collaborate and work together, partner with where our strengths lie, what is the insights that we have, the access to the customers that we have, and the fact that we can actually co-create a lot of these solutions is really critical. I love the crowdsourcing idea, and we use it often, and it's about what we can do to actually leverage people who maybe have been studying some of these innovations, what we can do to bring them to look at different processes that we have in our organization, and what we can do to build these solutions that are, at the end of the day, a social good. So lots of people will, yes, maybe bash the actuaries once in a while, but that's the reason why I got into actuarial science, because it is a social good. That's what I really believe, and I think it really talks to that shared growth narrative.
Which takes me to the final point I'd like us to deal with before we go to the audience for questions. And that's the issue of skills. Now, you're very smart, amazing black people here. Us, like, you know, you're rolling lyrical on the things that need to be done. Then you got to go back to the organization, and, you know, the people there have to do these things. And we've touched on a few professions that may struggle about these issues. And maybe there's also backgrounds, age, way of thinking, that indeed we want the sale, Ngazi. We don't want to talk about your grandmother. We want you to click buy, give us the credit card, and let's move it.
And believe me, your shareholder wants the sale either. They don't want to hear about the conversations.
The shareholder also doesn't want to regret. How do we, because often when we talk about skills in the 4IR context, we talk about very hard technical skills, which is a real issue. I appreciate that. But there's also these leaders, these managers, these people that are kind of, you know, or holding the purse strings, or the gatekeepers, who may not get this conversation the way you so well articulated. Vuyo, let me start with you. How do we get up the organizations now to get on this bus and understand that this is the way to do it? So that when young Kazi walks in with his startup and he says, we got to talk about people's grandmothers, and it eventually leads to a sale, old Vuyo doesn't say, oh no, what are you talking about? When do they click buy?
I think, Andile, the short answer to that is that it's actually hard. It's like peeling an onion. It makes you cry. I think our organizations, most of our organizations are actually struggling with exactly the same thing. And there's two fundamental reasons that there's a struggle. There's a struggle around the businesses that we run today. We know how to make them harm. You know, so if I needed to get an extra 5-10% of return, I know where the levers are. There's Yalu and the business that he's talking about. I'm not sure if I'm going to get that sale or not. So there's a fear in between, you know. I know how this thing works, and I know how to make this thing hum. If I'm asked to get an extra 5% on return, I'll be able to, I know the levels. I do also believe that the world we need to live in is where Yalu is talking about. You know, so there's this kind of challenge of fear on both parts. But I can't go to where Yalu is because that Yalu world is not going to give me the return that I've committed to my shareholders.
Right.
But I also do know that it's the world that we're going to live in. So how do I make time to be able to go there and not go there at the same time? So it's kind of, it fundamentally asks us to start thinking about what are the right business models for us to be able to do these things. Because maybe it asks us to be ambidextrous as an organization.
Okay.
You do the one thing with the one arm and you do something else with the other one.
All right. Samuel, I'm interested in your view.
Well, we spoke about dexterity and the ability to live in two different worlds. So I think you talk about the hard, the 4IR talks about the hard skills. In a sense, I mean, there was a part of the definition which I love, which is around the human, to allow greater, in a sense, encourage greater humanity. And there's a friend of mine who started a very successful fintech in Nigeria. And he says to get people to move from cash to digital requires human touch. So we mustn't lose that. It's actually going to be about that connection and about, because fundamentally the only real currency we will have is trust, for people to trust us. If you think about using a technology interface, you're clicking something and trusting that the click is going to get you what you want. That when you click pay, it's only going to take out that amount from your credit card. Now, obviously, that trust can be exploited, and it is being exploited. But it is around that ability of you as a brand, of you as an organization, to create a connection with the consumer who may be new to this world, because you're now able to reach people who've not been able to reach before, and make that connection happen and make that trust happen. So in training our people, yes, we need the hard skills, but we also need to remind them that it's about we're serving people. And that's hard. And to Via's point, it's even harder when you're saying, okay, I taught you these things and that's what made you get to be assistant general manager. And when you're going to get to general manager, you need to be able to work this way. And now I'm telling you, oh, well, you need to pause and listen and wait. So what's that going to do to your productivity numbers?
Yeah.
You know, you're confusing me.
Yeah.
You're telling me I need to deliver this sale,
Yeah.
and I'm being judged on this, and my KPIs are that.
Yeah.
But you're also telling me that I need to smile, and I need to have time, and I need to wait and have the conversation.
Understood.
That's part, for me, of the 4IR, because it's that place that says, okay, technology is creating more transparency, more speed, and what have you, but I still need to stop and pause and understand that it's for a purpose of serving a human being.
Enhance the connection. Nuru, your thoughts?
I think from a board perspective, it's an easy sell, even though you might have a 70-year-old or 60-year-old board chairperson, because I think at the end of the day, it's about efficiency. So when you look at return on equity, return on income, return on equity especially, I think the value proposition is an easy sell. I think probably where you might struggle is with your management, where they might need to make space for different skill sets. Just kind of reading up on the Fourth Industrial Revolution and the types of careers that will be relevant for the next couple of decades, you realize it's a lot of what he's saying about the soft skills and creativity. So how do you make the accountants and the engineers around the table make space and give a seat to the creative liberal arts type management professionals? So I think that's probably where there'll be a bit of a shift in mindset.
Yeah. Are you finding it, Kazi?
So I think our experience has been that it's actually about the process. So if you've built a very simple end-to-end customer process, it allows individuals who interact with potential consumers, children asking on their mother's behalf, whatever that may be, it allows them to actually spend more time having that human connection that Sam was talking about. Because the process that we built, for example, at Yalu, it takes 5 minutes end to end to take out a policy with no paperwork whatsoever. Now, I think when you have an antiquated sort of process where it's really outdated, it's paper heavy, there's a lot of processes that you need to remember and tick, you're not thinking about smiling. You're not thinking about engaging because you're like, I have to remember this from a face perspective. I need to remember this because our head of legal and compliance will say this to me if I don't do this. Then I need to do this. So in all of that, where are you going to find that human touch? But so if you make a process that is mind-bogglingly fast, very simple, you don't have to remember all these steps, you can now engage. And I think if we get that right, you'll find that more and more that human touch will start coming through.
Are you winning in your division at Old Mutual? No verkrampte bosses at a certain level?
We're working a lot with them, and Yavu's shed many tears, but we're getting there. And I think there's some great innovations that actually have occurred. The work that we're doing, giving patience to the process as well. I think exactly what Ngazi has articulated. Being on that innovation journey and making sure that we're mindful of the fact that it's actually a culture change. And it takes a while to actually change culture, but you have to be patient around that. And to start seeing the fruits is something that we celebrate often, and even just this afternoon, that's what I was celebrating with some of the people in our team around a new app that they developed, which is related to what we can do to ease the workload of our financial advisors. And I think it's great that some people have actually downloaded it and really spoken to the fact that it's a great innovation that they see the relevance for them. So it really is about having that patience, walking that journey. I think a lot of the points that everybody has made here, that sometimes you're making the incremental changes that will lead up to big changes over a period of time.
And not forgetting to smile.
And not forgetting.
Let's go to our audience. I can see that you guys have been very attentive. Hopefully you weren't just pretending, you really were paying attention. We're going to take some questions. There's a hand right here. I've got a lady right in front. There's a gentleman right at the back as well. If you could start perhaps with the lady here in front. Maybe just introduce us. Yes, the microphone is coming, don't worry. Just introduce us and tell us who you are. And then, of course, the question that you have. If you haven't pointed to anybody here, feel free to call them in order.
I'm with Old Mutual. And I think you're trying to take a panel to a certain level, and I feel that they are refusing to get there. As an example, we saw on social media today, young people in Nigeria are saying they're giving 7 days to organizations in South Africa to leave Nigeria. The country is burning. Small businesses are being disrupted everywhere. And I'm just worried that the language that we're using in this panel seems to be so high above. It's not touching on those issues. And I understand the issue about shareholders, but your shareholders are not going to have any value if the issues that we are faced with today are not dealt. So I'm just worried that this sounds like the normal language that we use in the financial services. What do you think needs to change, and what are you prepared to change going forward?
Great question. We're going to bank that one. We've got a gentleman at the back. Yes, sir.
Yes. We've been talking about the product, and my feeling is that we don't sell products, but we sell promises. We sell trust, as has been said. So when we're looking at the product from its start to the end, we're all talking about getting people into our products and buying whatever we're selling. But what about at the end, where we need to be delivering, where we're making a promise? Right at the end, how is the fourth industrial revolution going to help us with delivering on our promises?
Great question as well.
So I think there's great work that the financial services are doing in delivering and driving access, education to people that are probably economically active. What I would be interested for us to have some conversations around is, what is the role of financial services in stimulating that economic activity? How do we develop different economies? So that's one part the different economies and making sure that there are people to consume the products. But the other part that is linked to that is how do we actually define assets? Because I have a sense that, as my colleague said, we develop products, we sell products that we developed. In most of the African countries, there is informal markets. Have we begun to understand how we protect those assets? When there are people that live in rural economies, they've got assets. Do we understand those assets? Are we actually protecting those assets? So if someone has spent all her monies to build a home, do we define that as an asset? What is the role of financial inclusion in all of this? When someone has a herd of livestock, which is his wealth, do we actually protect that? And I think that's for me would be very interesting for us as financial services.
Okay. Loud and clear. Thank you so much for that. Ma'am, panel, you can go wild and grab anyone that you're comfortable with.
I'll go.
You go for you.
I think both Kanye and Thembisa's points are really, really, really powerful. This is the opportunity we have as the African continent. If you just think about when mobile operators first started in South Africa, anyone who wanted a cell phone had to have a contract, and you had to have a 24-month contract.
Yeah.
So it was a form of how we're actually being included. The moment mobile operators started thinking about, is there a different way of actually having a phone without a contract? That's when we started seeing the boom that we're seeing in mobile network operators on the African continent. And prepaid was an African continent invention. These are the opportunities we have on the continent to actually say, maybe, how do we start thinking about these things fundamentally differently? We've heard about Pesa, please call me, and all of those things. I think it also touches on a point that we spoke about a little bit earlier around education and financial education. We must start challenging ourselves. Actually, why do we have to educate people around our products? Why do we have to do that? Are we making them as simple can be so that anyone is able to actually get the products? Informal markets, small businesses, these are the parts of our economy that are financially excluded. And actually things around technology and digital give us opportunities to think about how we service those markets fundamentally differently. But the starting point has to be fundamentally different from the one of, this is what I have, let me find out a way of selling it.
Is it possible to get to a point where, as my sister was raising, that we protect the assets that this customer base has? So the home that they put their life savings into, the herd of cattle, and so forth and so on. Her question was, what do we call an asset in our industry?
I think it talks to diversity and inclusion, and I think that's exactly what Siskani was also talking to, is the fact that actually we need to make maybe more of our companies and what financial services companies do more inclusive, to be open to the ideas that other people will have, so that we can actually pair what we might be seeing as technologies that maybe are useful for us with the solutions that actually are important to people who are maybe different to us or are different to the kind of current of norms that the financial services industry has built over 200 years and plus. So I think you're very right that, yes, for many people who are across the African continent, actually when they encounter stock theft, people can die from heartbreak, from the fact that somebody stole their cattle and they've not been able to recover it. And it's really about reflecting that in the context of, should we be using drones to actually kind of find ways to police and find ways to source assets and protect them as well?
Yeah, I think this issue about what is an asset, we've thought that through as well, because when you think about, I guess bringing it back to what's happening in Joburg, this issue about exclusion and the fact that there are these economic disparities that are being reinforced, and there is a role that access to finance can play in helping bridge those disparities. In Kenya, we recently innovated in an area called movable assets. We have a registry now where you can register your intellectual property, you can register your crops, you can register your tire instead of the whole car, and therefore this word asset is no longer a fixed asset, which is land. Now anything that has value, maybe for the ladies, their shoe collection, I don't know. So anything that has value, you can register the value of that asset on a registry, and lenders and investors can now issue capital against that asset and put a lien on that asset, so you can't go around selling your shoes.
So this is already happening.
So this is already happening, and granted, you'll find the banks more active in the more easier to liquidate assets like crops and furniture, but then you'll find funds like investment funds actually issuing capital against intellectual property. And when you think about the creative economy, artists and musicians, what is their asset? It's their lyrics, it's their fashion.
It's IP.
So how is their IP? So how do you make that asset something that can be collateral? So I think, and it's possible because of technology, and I think that's what we're talking about. It's possible because of technology.
Samuel, let me get you in real quick.
So there's a couple of things here. So in terms of the question about asset, if we're not doing that, if we're not actually protecting the things that the customer values an asset, then we're not serving the customer. This is my point about redesigning your business from where your customer is, as opposed to telling them what they should have. And I think the other, it's an interesting thing that one of the interesting things I find thinking about what is inclusive, everyone talks about inclusive growth. And a lot of the time we have that conversation as a nice sort of chattering class conversation after dinner. But this is a conversation that's actually going around the whole world. It's not just in Africa. It was interesting, if you read some of the stuff the OECD has put out, they have recognized post the global financial crisis, there was a realization that if we don't have a way of growing that includes everybody, including the angry youth, we're not going to have anything. So I think part of this discourse, and maybe it's the language you're using is more a product of the education we have, and perhaps it seems disconnected with what's happening. The whole point is to make sure we reduce the risk of people feeling so disaffected that they can be exploited by, and there are always people who are going to exploit immigration as a point, and that's not unique to South Africa, it's not unique to Nigeria, it's exactly what's driving Brexit to a large extent. But if we don't have a conversation on how do we use technology, how do we use the access to capital we have, how do we use the knowledge we have to create a bigger base of people who participate, then you're going to get that happening more and more. So I think this is an important conversation. And it talks to the asset and it talks to the inclusion.
We do need to wrap things up here. Thank you so much to our panel. Another round of applause to our great panelists.